Now, we're here to talk about stablecoins, and I know Bernhard has just finished talking about stablecoins, but you're talking mainly about the front end. I think what I want to get from you guys now is more about what's going on behind the scenes. Because, there's all sorts of issues to do with that. There's regulatory frameworks, there's technical frameworks, other requirements. There's also different kinds of stablecoins. They're, it may not sound like the most exciting topic, but ironically, there is a lot of volatility in stablecoins. So, yeah, that's what I'd like to hear. First off, what is your company's experience developing stablecoins or encountering stablecoins? And probably what have you learned? And maybe what surprised you that you didn't know before? Who would like to kick off there? I think Niels.
It was a whole new world that opened for me. I basically we have a partner that is an electronic money institute in the Netherlands. They were one of the first in the Netherlands that had that license, and we recognize that it is a very tough legal and compliant area to go through. So we kind of try to really put ourselves as a IT provider, technology provider, and basically let the partner take on all the compliance stuff. But truly, we just in Europe there's already lots of legislation around electronic money. That's just an established piece of legislation that Europe actually is pretty proud of. They were one of the first in the world to have that, and we basically just want to have an e-money token on the blockchain. But recently, through crypto lobbying, the MiCA legislation came in, and now they're doing stablecoins, and all these new pieces of legislation are coming in. But yeah, so that's really where we try to stay a little bit back, let the experienced partners take over on the legislation side of things. Yes.
I see. And Bernhard?
Yeah, I'll start with what surprised me. That was mainly that nobody did it before us. We actually founded Centi as a payments company, and we were pretty convinced at some point that we can use a stablecoin somebody else would issue. And since that didn't happen, we just did it ourselves. On the regulatory side, well, the regulatory clarity was established pretty quickly. And so that wasn't really an issue, but in order to do what we had to do, we of course had to find the right partners, be it technology partners, be it the banking partner, because essentially finance is all about trust, and you need to build that trust, and you need to find those partners that trust in you and trust in your execution. And that's a journey you have to take. That's not something you just do overnight. And yeah, that's basically where we are today.
I see. How about Tokenized, James?
Yeah, so Tokenized has come at it from a very different approach. We sort of looked at the platform tech as our primary focus, enabling this on-chain smart contract enhanced financial future. So we've always sort of looked at stablecoins as just another instrument that fits into this new world that we're sort of building. For us, we had sort of a different perspective than I think a lot of companies in that we were sort of looking at financial instruments and smart contracts in a holistic manner and sort of first principles manner. So really thinking about, what these instruments are, how they differed, what were the risks behind them, how did the regulators treat them in different jurisdictions, what were the patterns that we saw. And so we sort of saw stablecoins as, it's actually very similar to credit vouchers and electronic money and even CBDCs. All these things have very similar kind of properties to them with varying degrees. And then if you look at the banking system, like demand deposits, essentially you got a loan to the bank and they pay you some interest to have it, but that gives you the right to make a use of their payment system to transfer money, but it's really quite complex behind the scenes. You're redeeming that loan back to the bank, they're sending money over to another bank, and that money's now crediting it in another user's thing. So we try to think about all these things in a very first principles approach. And we think stablecoins are kind of a very exciting proof of concept and a sort of stepping stone towards a CBDC type approach, as well as other types of payment instruments. But I think the laws as they sit today, for the most part, are pretty consistent, reliable, and I don't need to be changed for the most part. I think the innovation really comes about accepting a slightly different arrangement between the payment processors and the consumers and the businesses about who actually bears risk, who bears responsibility for security and keys and things like that. And I think a lot of innovation around there is where it's going to draw some pretty big impacts in terms of business.
Yeah, it's quite interesting looking at the rules and the proof of reserves and the set of circumstances and everything you must follow. I think, Bernhard, at Centi, you said that it is maybe a stepping stone to a CBDC, or the closest thing to a CBDC. Is there any chance that in future a company like yours could become a new Federal Reserve?
Well, probably not, because we're a private company and not a federal institution. But of course, the technology that we use could potentially be used. And so to us, it was really important to ensure that our stablecoin gives you a valid claim against the issuer, and it can freely flow between third parties. So it doesn't have to be that every holder of the token is, let's say, registered with us. But I don't think a CBDC will in fact be issued by a private company. There will, of course, be private companies involved in making that happen for a government.
Yeah, Niels, did you have any opinion on that one?
No, makes sense. Yeah.
James?
I would just say that I think the path to get there is going to be, they're going to build CBDC-like systems on traditional tech, kind of like upgraded RTGS systems and the like, and they're going to experiment with the wholesale and the retail, and they're going to kind of play with it. I think the on-chain, blockchain version with smart contracts and all this future is a little way down the line, but I think you can kickstart it by something like what Centi's done, where you get sort of a membership network going, where you get banks and institutions involved, where they all sort of share a stable coin, and they use it as a payment mechanism, and they sort of share the risk, and they recognize it as a legit payment instrument, and then eventually you can sort of hand control over to the central bank and port it into the rest of their system. So yeah, there's some insights into it.
There is, in fact, I'm thinking about it. There was 2 days ago, the European Central Bank issued a report of a proof of concept they ran with a UTXO-based blockchain. Mm-hmm. And they were very pleasantly surprised about all the capabilities, offline payments, better privacy, better compliance. I think most of the CBDC projects have been done on account-based systems. And it's very, very nice, actually, to see that there are some people in the European Central Bank that are looking at UTXOs. Yeah.
Yeah, that's a good point, because one of my other questions was, under the current regulatory frameworks for credit vouchers and stablecoins, is it actually necessary to have a blockchain-based structure to have such a token? Or will they allow you to issue one without a blockchain?
So I think I can take this question. It's, of course, not necessarily necessary, because then you're basically just in the regular banking business of taking deposits and keeping a database. But it comes with a lot of regulatory advantages to actually have it on a public ledger, because you're then not kind of holding this money on behalf of other people. You can be the issuer, but not a custodian, for example. You can completely separate that, which becomes difficult if everything is on your database. And you also have, of course, less security issues, because even the superpower admin in your company can't just go and sort of make a transaction happen or change something in the database. He would basically have to convince all the Bitcoin miners or even roll back the blockchain, which is totally not feasible. So I think it really comes with advantages, and especially transparency is an advantage. Also when you talk about CBDCs, I think, for example, the Chinese one that is now issued, well, that is not really a stable coin for me, because I don't have the transparency of like how many do exist, how many are in circulation, what's the velocity of the money. And for me, a stable coin would really mean it's on a public ledger, it's publicly verifiable, and everyone can check.
So there are many assets out there at the moment that sort of fall under that broad tent of what we call stablecoins. And some of them have definitely not been stable at all, like Terra Luna, to name one. And the most widely used stablecoin is Tether, And yeah, I don't know how much we can go into that, but I think it's widely accepted now that they don't back up their reserves with 100% US dollars or euro. And we've also seen what's called algorithmic stablecoins, which are probably the least stable kind of all. What's your opinion on algorithmic stablecoins, and do they deserve that name? Should they be called something else? Does anyone have a strong opinion on that?
I have a fairly strong opinion on it. So I guess stable with respect to what, of course, is the key question, right? Typically we're thinking like US dollar or some cryptocurrency. The problem with algorithmic stablecoins is you can't really see the future and you can't really tame real risk, right? Like it's impossible at a fundamental level. So no matter how fancy the algorithm is and how sophisticated the software is, it's doomed to fail in my view. There's going to be departures from that stable coin, and then people are going to pile on and freak out, and it's going to be in trouble pretty quickly. So I think it's just something that's impossible. Yeah.
Yeah, it's a bit like someone claiming that they have the perfect trading strategy, and it just never quite works out that way.
Yeah, true.
Yeah, and it's just one of those decentralized ethos outcomes, right? The way to look at decentralization is network resilience, permissionless access, not some like governance structure. And that's kind of like the big change between crypto and blockchain. And yeah, the algorithmic stablecoins are definitely in the crypto camp.
I honestly, I thought that was a very hilarious term the first time I heard it. It's some things you just know that's not going to work as soon as you hear the word. So I guess you would all agree then that a stablecoin, to be a stablecoin, must be, as a rule, as a fundamental rule, backed by reserves of some other asset, whether it be gold or fiat currencies, anything like that. Does everyone agree on that?
Yeah, I fully agree. I think algorithmic stablecoins shouldn't be called stablecoins, neither should so-called wrapped coins be called stablecoins, because just because you have Bitcoin on Ethereum doesn't make Bitcoin less volatile or stable. And yeah, the thing with these algorithmic coins is, you know, it's like a technocratic solution, and it might work in theory until then one of these exchanges you're connected to, I don't know, just jumps over your order, or, you know, is offline for some time, and then the whole thing can collapse. And it's kind of easy to stay stable in a market that's trending up and everyone's making money. But, you know, when it really matters to be stable is when markets are volatile and stuff is going down, and this is where, you know, clearly historically these have failed.
So I think even with those rules, even with guaranteed proof of reserves, governance standards, that kind of thing, there is always that potential for corruption to occur. You know, if someone issuing the coin figures out a way to game the system, or to get around it somehow and issue way more tokens than they're allowed to. So I guess where I'm going with that is, if you could design the perfect stablecoin on the perfect blockchain, what would your basic rules be?
I think the most beautiful example is how the native token on the network act, where you just have accountability in all actions. So everything can be just the way it is today, but there's just a register that enables accountability.
Should the rules themselves exist on the blockchain?
No.
Go ahead. Yeah. I mean, I think so. I think that's kind of, if the rules affect your position or the value of what you hold, then they're pretty much just as important as the actual transfer records to have on chain and to be accountable and immutable. And I think it just de-risks a lot of the organizational elements of finance, right? So if you have everything on chain, every record is instantly public and verifiable and always is. You remove black boxes, you remove potential issues, fraud, things like maybe if a company gets stressed and they just move some money around just to kind of get out of a sticky situation, it just takes that off the table as being a possibility. So I think it fundamentally simplifies things from an accountability perspective in a really important way.
Yeah, because without naming names again, we've seen examples where certain issuers have promised audits
Yeah.
They said they're always coming soon. Those audits never seem to happen. And in the end, their promise is just, hey, trust us. So we definitely need a way where that doesn't happen. There's some public and open way to verify that they do have the reserves that they say they do, and that can be checked by anyone.
Yeah, this shows a fundamental thing about stablecoins that it's also important people understand. There is an issuer, and there's always risk associated with that issuance, no matter how many audits you do, or even if you have a bank guarantee, there is a residual risk of a bank failure. But important is just that people try to de-risk as much as possible, try to make it as stable as possible, and are also accountable. So all this stuff, which is like some decentralized organization that does algorithmic stablecoin, at least for me personally, that's not really what I consider stable or would recommend to anyone, because it's just so intransparent, essentially. Who do I have a claim against? In regards to your question about sort of the perfect stablecoin, I would say we're close. We now need to work on adoption, on people using it, on developers using it, also people that aren't directly associated with us, and just grow the velocity and the volume. But in regards to the technical specifications and the sort of security you have, I would say it's very close to where we want to be.
Yeah, did anyone else have anything to add there? I guess probably the concluding point I'd like to touch on is if there was anyone in the audience, say, who was working at a blockchain company or interested in getting into smart contracts or tokenized assets, would you recommend pursuing the stablecoin as an option, as one of their products? James, would you encourage anyone to get into that, or would you tell them to steer clear?
I think it totally depends on the business needs. I think it's quickly going to get snapped up by the real financial players with licenses and expertise in managing risk and financial systems. So there's opportunities for sure, but it depends on what your angle is and what kind of value you can provide. But I do think it's going to get taken a lot more seriously very soon, and there's going to be some changes to it. So the big players are really going to make some big impacts soon. So that's the one kind of piece of advice that I'd say. But yeah, there is definitely opportunities, and it's definitely a stepping stone, I think, especially learning the tech, learning how it works, using that as a proof of concept to start getting into other instruments and other kinds of financial use cases. Absolutely.
Are we going to see a tokenized, as in tokenized TM stablecoin anytime soon?
So we as a company decided to stay out of the game of issuing and competing against other people. We want to be a neutral tech platform and let anyone issue on our platform and have relationships with their counterparties and holders. So we don't want to be a regulated entity. We don't want to be an issuer, apart from issuing our own instruments. So
very stable option. Yeah.
Very stable option. Yeah.
So Niels, how about you? Recommend it as a path, as a career path?
I also feel like there's so much experience involved in legislation that I love to have a partner that knows it and is experienced with it, and as well as like on the compliance side, but also on the technology side. Platforms like Tokenized are amazing, so we're definitely looking at that too, to use. Yeah, that's just facilitation. Yeah.
And you probably don't want to encourage anyone to create your competition, but would you recommend it to anyone else who had no prior involvement?
All depends on the opportunity, timing and opportunity. That's all it's about.
Fair enough. And Bernhard, I think I know what your answer is, but let's hear it anyway.
It's important to understand that primarily a stablecoin is an infrastructure project. Yes, a stablecoin can also be a very profitable thing to run, but you need to have sort of a long breath, and you need to work through this phase where it's purely infrastructure. So if you don't have a direct use case like we have with our payments, then there might not be a point. But this is really up to each business to know whether they have a demand, and especially please also check, is there another coin that could maybe fulfill your demand, because it might save you a lot of regulatory hassle and other considerations and legal fees to actually use an existing product.
Okay, thank you very much. And with that thought, I think we'll wrap up the session there, and everyone can go and get a coffee and get refreshed. So thank you very much to our panelists.